Welcome back to Talk Tickers, where we like to take these earnings calls, and really help you guys figure out what's important, what you should be paying attention to. So today, we're going to be looking at Sea Limited's Q4 2024 performance. And honestly, this one is a pretty good story.
Yeah, for sure. They had strong growth across all three of their businesses. So that's Shopee, their e-commerce arm, Sea Money, their digital financial services, and Garena for their digital entertainment.
I'm really excited to dig into this. But before we do, let's take a look at kind of the overall results. Sea Limited exceeded guidance, and they achieved double-digit growth across all three of their segments.
Really impressive stuff.
Oh, by the way, this is their second straight year of annual positive profit.
Yeah, and all three businesses are reporting positive adjusted EBITDA. That's a big deal for a company like Sea Limited, they've been investing so much in growth for so long. It's great to see them hit this milestone.
It really does signal that they're moving into a more mature phase of, a more sustainable growth phase.
Yeah.
Plus, we're seeing some big numbers. Shopee's e-commerce GMV exceeded $100 billion for the first time. Sea Money's loan book hit $5 billion, and Garena's Free Fire game had a resurgence with 34% year-on-year growth in bookings. Those are big numbers.
Absolutely.
So let's unpack these, starting with Shopee.
Sounds good.
This e-commerce giant is celebrating its 10th anniversary this year, and they're doing it by hitting over $100 billion in GMV, 10 billion orders, which is insane.
That's a huge amount.
It's not just about scale, though, right?
Mm-hmm.
They've achieved profitability in both their Asian market, their core market, and also in the Brazilian market, which is growing like crazy.
Yeah, Brazil is a really exciting market for them. I think it really speaks to their ability to just adapt to different markets and execute on a global scale.
Yeah, for sure. And their success in those markets can be attributed to three key operational priorities.
Yeah.
Enhancing price competitiveness, improving service quality, and strengthening their content ecosystem.
Yeah, they've been really clear about those priorities, and it's paying off.
Now, when I hear enhanced price competitiveness, the first thing I think of is crazy discounts, price wars, but it sounds like Sea Limited is doing it a little more strategically than that.
Right, exactly. 2024 was a year of a more rational, competitive landscape, I'd say.
Mm-hmm.
And instead of just slashing prices, they were able to really leverage ad tech to boost their monetization. In fact, their ad revenue was up over 50% year on year in Q4, which is incredible.
That's a massive increase.
Yeah, it really highlights a trend that we're seeing more and more in e-commerce.
Yeah.
These platforms are becoming like advertising giants in their own right.
It's almost like a flywheel.
Mm-hmm.
Right? They attract more users, they offer more products and services, which makes them a more attractive platform for advertisers, which then fuels their revenue growth, which allows them to offer even more competitive prices.
Precisely. It's a smart strategy.
And then, of course, there's their focus on service quality, which is something they've been really vocal about.
Oh, absolutely.
They've invested heavily in SPX Express, which is their integrated logistics network, and it looks like it's paying off. Almost half of their orders in Asia were delivered within 2 days. That level of speed and efficiency is like a game changer in terms of customer experience.
Oh, absolutely. I mean, 2-day delivery is becoming like the gold standard in e-commerce.
Yeah, it's what everyone expects now.
Exactly. And Sea Limited's achieving that, especially in a region as geographically diverse and challenging as Southeast Asia. So that's really impressive.
It is impressive. And then there's this idea of a strengthened content ecosystem.
Right.
It's not a phrase you typically associate with an e-commerce company. It sounds a little more, Silicon Valley techie. But what are they actually doing to build this content ecosystem?
Think beyond traditional online shopping. Shopee is creating a much more engaging and entertaining experience. Think live streaming. Think collaborations with platforms like YouTube. And they're seeing some success with that. Shopee Live is growing super, super fast. And their partnership with YouTube led to a 6-fold increase in daily orders attributed to YouTube content in Indonesia alone.
Wow, that's huge.
Yeah.
So they're really blurring the lines between e-commerce and entertainment. You can shop, watch live streams, discover new products from influencers, connect with friends. It's becoming this whole lifestyle, not just a place to buy things.
Exactly. Especially as they target younger, more digitally native consumers. I think this is going to be huge for them. And then let's not forget about Sea Money.
Right, their digital financial services arm.
Exactly. They're quietly becoming a financial powerhouse, especially with these Q4 results.
Yeah, They achieved annual revenue of $2.4 billion and adjusted EBITDA of over $700 million. And both of those figures are growing at over 30% year on year. Those are impressive numbers for any financial services company, but especially one that's operating primarily in emerging markets. What's fueling this explosive growth?
Well, they're rapidly becoming a leader in the Southeast Asian consumer lending market. Their loan book grew over 60% year on year, reaching $5 billion. They also added 5 million new borrowers just in Q4, so their active users are now over 26 million.
That's a massive increase in users.
Yeah.
But with such rapid growth in lending, it's only natural to wonder about the risk involved. Are they taking on too much risk with all this expansion?
That's the question, right? But despite all this growth, C-Money has managed to maintain a really stable risk profile. Their 90-day non-performing loan ratio is only 1.2%, which is really, really manageable.
That is very manageable. So how are they balancing this impressive growth with, a responsible approach to risk? What's their secret sauce?
Well, their strategy is based on two main pillars, on-Shopee SPayLater loans and off-Shopee cash and SPayLater loans.
Can you break that down for our listeners who might not be familiar with those products?
Sure. So SPayLater, think buy now, pay later. It's super popular these days, especially among younger consumers. And by offering SPayLater on Shopee, C-Money can start building initial credit track records for their users, which allows them to develop market-specific credit models. It's a great way for them to get a sense of someone's creditworthiness before they offer larger loans.
So they're essentially using Shopee as like a testing ground for their lending products.
Exactly.
They're building trust, gathering data on spending habits, repayment behavior, which allows them to make more informed decisions down the line.
Precisely. And then once they have a good understanding of the user's credit history, they can expand beyond the Shopee platform, and that's where the off-Shopee loans come into play.
I see. Makes sense.
They offer cash loans and SPayLater for purchases made outside of Shopee, so this strategy lets them tap into a much larger pool of consumer spending.
So it's like a two-pronged approach. They're leveraging Shopee's data, their user base, to build a credit assessment system, and then they're expanding outward to try and capture more of the consumer lending market. What I find interesting is that they're not just focused on growth at all costs.
Right.
They're talking about sustainable and healthy growth, which is a really good sign for investors.
It definitely is. And that brings us to Garena, C Limited's gaming division. They've faced some challenges in the past, especially as we all, came out of the pandemic and people spent less time gaming. But now they seem to be back on track. And their flagship game, Free Fire, is leading the charge.
Free Fire is a global phenomenon. Tell us about their comeback story. What's driving their success?
Well, in 2024, Garena had a remarkable year, 34% year-on-year growth in bookings, and they're projecting continued growth in 2025. Free Fire is still the world's largest mobile game by average daily active users, or DAU, and they saw a 28% year-on-year increase in average DAU, well above 100 million users.
Those are impressive numbers. They're clearly doing something right to attract and retain such a huge user base. What's the secret to their success?
Well, they've focused on a few key things. One is accessibility. Free Fire is designed to be lightweight, so it can run smoothly on a wide range of devices. And this is especially important in these high-growth emerging markets where people may not have the latest smartphones or the best internet connection.
Right.
For example, they made some server improvements in Nigeria last year. Active users there surged by 90% year on year.
Wow. So they're really removing those barriers to entry, making gaming accessible to a much wider audience. But how do they keep all those users engaged?
Well, Garena is really good at keeping things fresh and exciting. They release content updates frequently. They've partnered with some really popular franchises for collaborations like Demon Slayer, Blue Lock, and Naruto Shippuden. They're even creating these immersive real-world experiences that kind of blur the lines between the game and reality.
Yeah, they're really creating a whole universe around their game.
Yeah,
it's not just about playing on your phone anymore.
Right.
It's about connecting with other fans, experiencing the game in new ways, feeling like you're part of something bigger.
It's really smart. And they're masters of community building.
Yeah.
What's really interesting to me is that they don't take a one-size-fits-all approach.
Yeah.
They're hyper-focused on tailoring their content and marketing to specific regions.
Give me some examples of that. How does that hyper-local focus play out in practice?
Well, for example, they incorporated thematic elements into the game to celebrate the Day of the Dead in Mexico, Tet in Vietnam. They had a Ramadan campaign in Indonesia where players could donate in-game currency to help renovate an orphanage.
That's really cool.
Yeah, so by incorporating these, local elements and these cultural nuances, they're showing their users that they understand their traditions, they respect them, and it's just a really great way to build that deeper connection with the players and foster a sense of belonging within the Free Fire community. They're also really smart about leveraging social media, TikTok, YouTube. They have over 1 trillion views across those platforms, and they also have their annual esports event, the Free Fire World Series, which recently returned to Brazil.
So they're using all these different avenues, social media, esports, hyperlocal content, to build a global gaming powerhouse. They're making their game accessible, engaging, tailoring it to local markets, and creating a truly immersive experience. It's a really impressive strategy.
It really is. Welcome back to Talk Tickers. In part 1, we went through Sea Limited's Q4 2024 performance. We talked about their strategic wins in e-commerce, digital financial services, and gaming. Their success isn't just about capturing market share, right? It's about being operationally excellent.
Yeah, their focus on efficiency was something that really stood out to me, like whether it's Shopee optimizing their logistics network with SPX Express or C-Money's, really sophisticated credit assessment process. It seems like they've figured out how to do more with less, and they're not sacrificing growth to do it. They're actually fueling their expansion by being efficient.
Yeah, absolutely. Sea Limited's focus on efficiency is a huge part of what's driving their profitability, and it sets them up really well for sustainable growth over the long term. And it's not just about the individual businesses operating efficiently, it's also about the synergy they create through this integrated ecosystem they have.
I was really fascinated by how they're leveraging Shopee's massive user base to drive C-Money's growth. It's like they've built this customer acquisition machine. They attract millions of users to Shopee, and then they seamlessly introduce them to C-Money's financial services. It's really smart.
It's a brilliant strategy when you think about how much it costs a traditional bank or financial institution to acquire a new customer. Sea Limited basically bypasses that expense entirely by having everything integrated like this. But it's not just customer acquisition, right? Think about the data they get from this integrated approach.
Oh yeah, that's a great point. By looking at user behavior across both Shopee and C-Money, they can build these really precise credit risk models. They're gathering all this data in real time on spending habits, payment history, even social interactions, and that allows them to assess creditworthiness at a level of detail that traditional lenders just can't match.
It's a game changer, especially in the world of finance. They're really using data and technology to make financial services more accessible, more inclusive, especially in emerging markets where traditional banking infrastructure might be lacking.
We take a step back and look at the big picture. Sea Limited is building something really impressive. They're basically creating a digital economy within Southeast Asia and Latin America. They have this whole suite of services that covers every aspect of a consumer's digital life: shopping, payments, entertainment, and now credit.
And they're doing it in a way that's really focused on accessibility and inclusivity, which is empowering millions of people who may not have had access to the formal financial system before.
This brings up an interesting question. What are the implications of Sea Limited's success for other players in e-commerce, fintech, and gaming? What do they have to do to keep up?
I mean, Sea Limited is setting a new standard for customer experience, convenience, and affordability. And I think their success is a bit of a wake-up call for traditional businesses.
Yeah.
They need to adapt or they're going to get left behind.
It'll be really interesting to see how established players respond to this challenge.
Yeah.
Will they try to copy Sea Limited's integrated model? Will they double down on innovation? Will we see more partnerships and mergers as companies try to stay competitive?
It's definitely a dynamic landscape right now, and Sea Limited is right there leading the way. But let's not forget about Garena, their gaming arm. I think their success really highlights the massive potential of mobile gaming, especially in these emerging markets.
Yeah, Garena's results really show how gaming is becoming a mainstream form of entertainment, especially in regions with high mobile penetration rates and young, digitally savvy populations.
Free Fire is a great example of how to build a game that's both engaging and accessible to a global audience. It's lightweight, it can run on a lot of different devices, and they're always updating it with new content, features, and collaborations.
And their hyper-local focus is clearly working for them.
Oh, yeah.
By tailoring the game to different regions, incorporating those local elements, they're creating a deeper bond with their players. It's more than just a game, it's a shared experience.
And they're masters of community building, right? using social media and esports to connect with fans, make them feel like they belong.
Looking at Sea Limited's success across all three of their business segments makes you wonder what's next, right? Where do they go from here?
That's the big question. One area I'm really excited about is their potential to leverage AI to enhance their operations and create even more value for their users.
AI is changing every industry.
Yeah.
And it's clear that Sea Limited is really embracing it. How are they using AI right now to move their business forward?
They're using AI across a variety of functions, from optimizing logistics routes to predicting delivery times to personalizing product recommendations and even detecting fraudulent transactions.
So it's not just about the back-end stuff. They're also using AI to improve the customer experience. Imagine getting personalized shopping suggestions based on your past purchases and browsing history, or having your deliveries arrive right when you need them.
Exactly. But the potential for AI goes way beyond those kinds of everyday things. They're using AI to analyze these huge data sets to identify new trends, understand consumer behavior, and even predict future demand.
So they're not just reacting to changes, they're anticipating them.
Exactly. They're using AI to get a competitive advantage and stay ahead of the curve. It's like they're building a crystal ball for the future of e-commerce, fintech, and gaming.
It's pretty exciting to think about. But of course, this is not investment advice.
No, not at all.
We're just exploring the potential of AI here and how it can impact Sea Limited's business. Always do your own research, consider your own investment goals and your risk tolerance before you make any decisions.
Absolutely. It's important to be informed and make responsible choices when it comes to investing.
So speaking of investment choices, our listeners love hearing our wild but plausible trade ideas. What speculative scenario are you looking at based on what we've learned about Sea Limited today?
Okay, let's have some fun. Let's call this one the AI-powered growth play.
AI-powered growth. I like the sound of that. Tell me more.
Well, we've already talked about how Sea Limited is using AI to optimize their existing operations, but what if they take it even further?
Yeah.
What if they start using AI to develop entirely new products and services?
What kind of AI-powered products and services are we talking about?
Well, imagine an AI-powered financial advisor that gives you personalized investment advice based on your risk profile, your goals, and market conditions. Or how about an AI-powered shopping assistant that finds the best products for you and even negotiates the prices?
Those are some pretty interesting ideas. It sounds futuristic, but AI is developing so quickly that those kinds of applications could become a reality soon.
Exactly. And Sea Limited, with their huge data sets, their tech expertise, and their deep understanding of consumer behavior, is in a really strong position to lead in this space.
So with this AI-powered growth play, are we just talking about buying more Sea Limited stock?
Not necessarily, although you could definitely increase your exposure to Sea Limited if you believe they're going to be at the forefront of AI innovation. But you could also look at other companies that are investing heavily in AI.
So we're casting a wider net, looking for companies that are positioned to benefit from the AI revolution, even if they're not directly connected to Sea Limited's ecosystem.
Exactly. Companies like NVIDIA, they make the chips that power a lot of these AI systems, or C3.ai, which develops enterprise AI applications. Those could be some interesting companies to consider for this AI-powered growth portfolio.
So this play is really about finding the companies that are like building the tools for the AI gold rush.
Exactly. But it's important to remember this is all speculative. AI is still in the early stages, and there are still a lot of unknowns. Always do your own research, carefully weigh the risks before making any investment decisions.
All right, now before we move on to part 3, let's just take a moment to recap the key takeaways here. Sea Limited is doing really well. They're embracing innovation, they're efficient, and they're putting their customers first.
They're not just along for the ride when it comes to digital transformation, they're actively shaping it.
And while there are definitely challenges and risks ahead for them, their strategic vision, their tech expertise, and their deep understanding of the markets they operate in suggest that they're in a good position for continued growth in the coming years.
We'll dive into those risks and challenges a bit more in part 3.
Yep, we'll explore some of the potential headwinds they might face, and we'll share some final thoughts on their long-term prospects. So stay tuned. All right, welcome back to Talk Tickers. We've spent the last 2 parts of this deep dive really digging into Sea Limited's Q4 2024 performance. We've talked about their strengths across all their different businesses, but as investors, I think it's really important to think about the challenges that Sea Limited might face in the future as well.
Absolutely. I mean, they've got a lot going for them, but there are some potential headwinds out there, right?
Right.
I think one of the most obvious ones is just the constantly evolving competitive landscape.
Yeah.
You've got new players coming in all the time. Existing rivals are getting stronger. So Sea Limit is really going to have to stay agile and innovative and keep delivering that exceptional value to their customers if they want to keep that leading edge.
It really is like a constant chess match, isn't it?
Mm-hmm.
They've got to be thinking a few steps ahead, anticipating their competitors' moves. What are some of the competitive threats that you're seeing out there on the horizon?
Well, in the e-commerce space, right. They're up against some big names like Alibaba and Amazon.
Yeah.
And then you've got those regional giants like Tokopedia in Indonesia, Mercado Libre in Latin America.
Yeah.
These companies have a ton of resources, big logistics networks, loyal customer bases. Sea Limited's going to have to work hard to defend its market share.
For sure. It's a real battle out there.
Yeah.
What about on the fintech side? Are there any specific competitive threats they need to be watching out for there?
Well, Sea Money's facing competition from both traditional banks and these new fintech startups that are popping up everywhere.
Yeah, it seems like everybody's getting into fintech these days.
Right. The traditional banks are finally waking up to the digital revolution. They're investing heavily in their online and mobile banking platforms. And then at the same time, you've got all these agile fintech startups that are targeting very specific parts of the financial services market.
Yeah, they're really good at niching down, aren't they?
Yeah, they are.
It's like Sea Money's getting squeezed from both sides. How do they plan to deal with that?
Well, they're going to have to keep innovating, keep expanding their product offerings, and just make sure that the user experience is as seamless and as user-friendly as possible. I think one of their biggest strengths is their understanding of the Southeast Asian market.
Yeah.
And they're really good at integrating their services with Shopee, which is so popular.
Yeah.
But, they can't afford to just sit back and relax. They've got to stay on top of things.
Absolutely. All right, so competition is definitely a big challenge. We also need to think about the regulatory landscape, especially for their fintech business. Governments all over the world are really starting to scrutinize the tech sector, and that could mean some changes that affect Sea Limited's operations.
For sure.
What are some of the regulatory risks that you see for them?
One of the biggest areas of concern is data privacy, right? Sea Limited collects a huge amount of data on its users, and regulators are really starting to focus on protecting consumer privacy.
Right.
So Sea Limited's going to have to make sure that they're complying with all the relevant laws and regulations.
It's a tough balancing act because they need that data to personalize their services and improve the customer experience.
Yeah.
But they also have to be responsible with it and respect their users' privacy.
Yeah, it's a tough one.
What other regulatory issues are you seeing out there?
Another thing to watch out for is antitrust, right? Regulators are really looking closely at the power of these big tech companies. And Sea Limited's dominance in certain markets could draw some unwanted attention. So they need to be careful about their market share, make sure they're not doing anything that looks anti-competitive.
Yeah, it's a real tightrope walk. They need to grow, but they also need to avoid any, regulatory trouble. Now, besides all that, we've got to factor in those big macroeconomic things that are happening in the world.
Right.
We could see a global recession. There could be a slowdown in emerging markets, and that could really put a dent in their growth.
Right, absolutely. Their businesses aren't immune to economic downturns. If we see a recession, people might cut back on spending, and that would hurt their e-commerce and gaming segments. And if there's a slowdown in economic activity, well, that could lead to more loan defaults, which would hurt their digital financial services.
So even though they've been really resilient in the past, they're not completely immune to what's going on in the global economy. What are some steps they can take to kind of protect themselves from those macroeconomic risks?
Well, they've got to focus on controlling their costs, keep their balance sheet healthy, and just keep working on diversifying their revenue streams. I mean, they've already made some good progress there by expanding into new markets, launching new products, things like that.
So it sounds like they're being proactive about managing risk.
Yeah, they are.
All right. Now, as we wrap up this deep dive, it's really important to remember that everything we've talked about here is not financial advice.
Right.
We're just sharing our thoughts and insights, and we always encourage our listeners to do their own research.
Absolutely. Investing always involves risk. It's really important to make informed decisions that are right for your own financial goals and your own risk tolerance.
Exactly. But hey, let's end on a fun note. We've been talking about all these hypothetical trade ideas. We've saved the wildest one for last.
I like where this is going.
Hit us with your most speculative, your most outrageous, but somehow still plausible trade idea based on everything we've talked about today.
Hey, all right, this one's going to be a little out there. Ready?
I'm ready.
Let's call this the C Limited Goes to Hollywood play.
C Limited goes to Hollywood. And that's something I didn't see coming. What's the logic behind this crazy idea?
Well, we've talked a lot about their commitment to building this integrated ecosystem, right?
Right.
And we've seen how they've been able to seamlessly blend e-commerce, fintech, and gaming.
Right.
But what if they set their sights on something even bigger? What if they try to take over the entertainment industry?
Whoa. Slow down.
Yeah.
How could C Limited possibly break into Hollywood?
Well, imagine them buying a big streaming service or a major film studio.
Okay.
They could use their huge user base, their data skills, their experience with digital content to become like a global entertainment power player.
It's a bold move, but I mean, it's not completely out there. They've shown that they're not afraid to make big acquisitions, and they have the resources to do it. What would be the point of a move like that?
Well, it's all about those synergies, right? And expanding their ecosystem even further. Imagine them bundling their streaming service with Shopee, offering special content to their e-commerce customers. They could use C Money to finance film productions and distribute them all over the world. And they could use Garena's gaming knowledge to create these awesome interactive entertainment experiences.
So you're picturing C Limited transforming from this regional tech giant into a global entertainment behemoth. That's a big jump.
It is. But it's the kind of move that could take them to a whole new level.
But this is all very hypothetical.
Oh, absolutely. There's no guarantee they'll actually try to do this. And even if they do, there's no guarantee it'll work.
Right. This C Limited goes to Hollywood idea is more of a fun what-if scenario. But it's cool to think about.
It is. It shows how ambitious they are, and it shows they're not afraid to try new things.
Yeah, they're definitely a company to keep your eye on. Well, that brings us to the end of our deep dive into C Limited's Q4 2024 earnings call. We've covered their awesome performance, their strategic plans, the challenges they're facing, and even some crazy trade ideas.
We hope you enjoyed this look into the world of C Limited.
And we hope you'll keep exploring this company and keep learning about all the trends that are shaping the future of the digital world.
As always, do your own research and make smart investment decisions.
Thanks for joining us, and until next time, happy investing.